Hi guys, good afternoon. This is Business Lunch. I'm Sonia and with me is Mangalam. We're not out of the woods at all. Don't be fooled by the headline index being in the green. There's plenty of pain beneath the surface. The mid-cap index, in fact, is down about 40-odd points. And so many cuts seen in individual stocks. Divan Housing, RBL Bank, Dish TV, Jet Airways. The list of losers is pretty endless. Mangalam, hi, good afternoon. The advanced decline ratio, I think, will tell you a clearer picture of which way things are headed.
Absolutely. We opened with, around 4 or 5 stocks in the green for one in the red. And now those two lines have crisscrossed and moved further apart. And right now, as we speak, the red line is way above the green one, the widest that they've been all through today's trading session. 1,300 stocks in the red for for 770 in the green. Meanwhile, I'm looking across the European screen because that would be important given the sort of developments that are taking place in Italy with regards to the fiscal deficit number out there. The Italian index has opened higher with a gain of about 1.5%, and all the other European markets, barring the FTSE, are gaining further steam. So the German index as well as the French indices, both these indices are at the high point of the day. So we will keep an eye out on the markets across the world as well. Let's see whether they have a bearing on our markets or not. There you have it, the Italian index up about 1.2%. But what is outperforming today is the Nifty Bank, and that's primarily on account of HDFC Bank gaining in trade on the back of a robust set in its second quarter. We have Abhishek with us with the highlights and what the brokerages are making of it.
Highlight the result as such is the best in last 3 quarters in terms of the loan growth, the net interest income growth, operating profit or the profit level itself. The net profit, in fact, the growth is the highest in last 7 quarters. The core operating profit, if you remove the treasury part of the income, that has grown at 28% YOY and about 9.5% quarter on quarter. This 9.5% quarter on quarter is the highest in last 6 quarters or one of the highest, second best highest in last 11 quarters. You look at the fee income, now the 24% loan growth actually drove the fee up by 26% on a YOY and about 4% sequentially. So retail and corporate portfolio grew at 23.5% and 24.5%, which was very strong. And the gross NPA addition has been similar to what we saw in the previous quarter, 3,250 odd crore of slippages versus 3,550 odd crore. But the gross NPA movement in terms of the growth sequentially was one of the lowest in last 5 to 6 quarters. Brokerages are very bullish. They have a target price ranging between 2,350 to 2,500 plus. So that means an upside of 15 to 25% from current levels. Macquarie, Nomura, Motilal, Credit Suisse, Citi, Morgan Stanley, all are positive on the stock. Back to you.
Okay, all are positive on the stock. In fact, a lot of brokerages believe that there will be, of course, some market share gains as well that HDFC Bank could see because of the recent turmoil that we've seen in the space in general. But pharma stocks are in focus today. Dr. Reddy's and Biocon both trade in the green at the moment. Let's get Ekta in to tell us why. Ekta, let's start with Dr. Reddy's. What's the buzz there?
Well, Dr. Reddy's, I'm picking up from my sources, is seeing a US FDA inspection which has begun today on one of its most critical units, that is the Duvara facility. Now, remember that the Duvara facility is an oncology formulation facility for Dr. Reddy's. It is important because that is the particular facility which is under warning letter all the way back since 2015. It was re-inspected by the US FDA in March of 2017. At that point in time, they were issued 13 observations. So things were were in a limbo for quite a long period of time. But in this interim period, the management had indicated that they had completed remediation of that particular facility and they had re-invited the US FDA to re-inspect that plant. And hence it should probably be, the street will probably be hopeful that maybe it will probably see the light of day. But as of now, we understand that this particular Unit 7, which is the Duvara facility, has seen a re-inspection by the US FDA begin today itself.
All right, Ekta. And what's the news for Biocon?
Well, Biocon is in focus because the European regulatory authority, when it comes to, drug approvals, etc., their scientific committee, basically has given a positive recommendation for one of Biocon's biosimilars, which is basically trastuzumab, or the biosimilar version of Herceptin. So now what happens is that this particular positive recommendation will probably bode well for Biocon when the regulatory commission, the EU regulators, actually look at it for a final approval. And hence it's a positive stepping stone for Biocon. Remember that the market size of this particular drug in the European Union is $1.9 billion. It is used for breast cancer as well as gastric cancer. And they've already received an approval for trastuzumab in the US.
All right, Ekta, thanks a lot for that. So those are the pharmaceutical stocks in focus, but Asian Paints will be the big one to watch out for as it comes out with its numbers today. Mangalam, what are you watching?
Well, for Asian Paints, the stock is currently at the lower end of today's trading range. At the same time, it's corrected about, 15-16% from its record high. For all the paint companies, three key problems. The first one, crude. Second one, weaker rupee. And the third one, higher valuation. So even after a 15-16% cut, Asian Paints does trade at 43 times one-year forward earnings. So with that in perspective, we're looking at a couple of things. In terms of top line, a 12.5% growth is on the cards. That's what our poll throws up, closer to that 4,800 crore mark on a consolidated basis. EBITDA is likely to grow in line with the revenue. So the street believes that the company will go ahead and protect its margins despite the higher input cost environment. That's because the company had taken a few price hikes, and profit after tax seen higher by about 10%. So let's break the top line growth down for you. 12.5% would come from 8 to 10% volume growth, domestic volume growth that is, and 2 to 4% realization growth. What are the upside triggers for volumes? Well, the paint stocks or the paint sector was brought into GST 18% slab as against 28%. So that could be a volume boost. However, due to the price hikes that the company had taken in the prior quarters, 3 to 4%, as well as the shifting of the festive season to the next quarter, that may be a trigger on the lower end for volumes. 8 to 10% is something that the street will be happy with. Management's commentary on competition, input prices, as well as where they see rupee going and what they're doing for the margins would be most important.
Okay, we'll not have to wait too long. We'll get to know very soon Asian Paints and what they report. But the other stock to watch out for is Hindustan Zinc. This is a stock that has done nothing for investors in the last 2 years. It's moved nowhere. It was about 280 2 years back, and it's 285 today. Nigel is here to give us the expectations for the second quarter's performance. Nigel, over to you.
Well, Sonia, you need to keep in mind that they also pay out big dividend, and that could be, something that could move the stock actually this time around, because the numbers are not expected to be good. So keep an eye out if there's any commentary in terms of a dividend payout. Now, going with our numbers, our poll threw up, a bit of a degrowth in terms of the top line. It should be down in double digits. A few factors play out here. One is that, in fact, you have base metal prices, that's zinc, lead, as well as silver. They're down on a year-on-year basis as well as on a sequential basis. But what saves them to a tad bit is that, in fact, the rupee has depreciated. And a weaker rupee is good news, in fact, for them. So that's basically on the top line. In terms of volumes, Kotak threw up a few numbers. They're expecting a degrowth in terms of the zinc volumes. Now, that's from where majority of their revenues come in. So keep an eye out on that front. That's because they're moving from open cast to underground mining. So that transition needs to be tracked very, very closely. And the other factors, they're expecting a bit of a growth in terms of lead volumes. Kotak's also expecting the silver volumes to come in higher because the SK mines are likely to ramp up. So that explains why the silver volumes should come in higher. Moving to the operating performance, then the operating profit should contract by more than 20%. Margin compression is something that the street is looking forward to. A few factors you need to keep in mind here. Volumes are lower, prices are lower, so no operating leverage really playing out there. And also coal availability will be key. Remember, they have a high amount of linkage, but the amount of coal that they're actually receiving from Coal India has been rather low. In addition to that, the railways availability has been lower, so coal availability could hurt them. And profit numbers should contract by more than 30%. In a few hours from now, we should expect those numbers. Back to you.
All right, Nigel, thanks a lot for that. Numbers in a few hours. Well, holding fairly in the green for the Nifty, about 30 points, 125 points for the Sensex. But the pain, as Sonia pointed out earlier, as well, is in the mid-cap space. Freak moves happening on individual stocks. Infibeam should come up for you. 25% from the high point of the day. Briefly hit the FNO temporary circuit of 20% as well. And remember, this is an FNO stock, so no real circuits or freezes out there. So this is something we have to keep an eye out on. Has been a very volatile stock, known for these freak moves. In fact, was going through the data just in the last 3 months itself. There have been 7 or more moves of 15% plus on either side on Infibeam. 4 of them have been on downside. So very volatile. Would
would be an understatement.
Would be an understatement, and retailers should definitely stay away from it, given its F&O nature and no circuits. But with that, we shift focus from the equity space to the agriculture space. Now, the Kharif arrivals are selling lower than their minimum support price. Manisha, help us understand this.
Well, thank you so much. Yes, it really seems as a big issue, because as we have been telling you also, that MSP announcement is one thing, and on paper everything looks good. But when it comes to the implementation part of it, that is where the problems begin. We understand that not all farmers, all crops, all states will be able to get MSP, but this is something that the government really has been trying to achieve, doubling farmers' remuneration, increasing their income, etc. And even as arrivals for the current Kharif have started coming into the markets, the state governments clearly are not procuring, are not ready for it. The moisture content in the crop also is higher. The global commodity prices also are trading on the weaker side. So while there is a higher MSP, but when you look at the crops, at least 9 of them are trading anywhere 6 to 40% lower their MSP. So starting with the edible oil space itself, soybean prices are 9 to 12% lower than MSP. If you look at pulses like arhar, moong, urad, etc., 25 to 35% less than MSP. And it's a similar situation for the coarse cereals as well, where you have bajra, jawar, ragi, all of those prices also trading nearly 18 to 28% on the lower side. So it is going to be quite tough. Many of these states are going for elections this year, and the MSP has been, or the farmers' protest has been, one buzzing, burning issue in this year. And if they do not get MSP, if it is not implemented properly, there could be some more serious concerns then coming in from these states.
Okay, thanks a lot for that, Manisha. Well, those are Kalyani Steel's numbers. Net profits growing in single digits, up about 7% at 28 crores versus 26 crores year on year. So hardly any growth in net profits. Let's wait for more numbers to flash for you. Revenue growth is not bad, actually. 22% growth is what they're seeing at 386 odd crores. But single digit growth as far as profits are concerned. But the one stock that has really disappointed today is Persistent Systems. It's under a lot of pressure after it posted a disappointing set of numbers for this quarter. The revenues declined 4.3% in an environment where a lot of large cap peers are reporting growth in revenues, and the first half FY19 revenue growth came in at about 4.7%. Rima's here with all the highlights.
Yes, clearly a very disappointing quarter for Persistent, as revenue growth has come in much weaker than anticipated, with a decline of 4.3% versus expectations of about 0.5% decline. In fact, if you see the revenue performance for the last couple of quarters, it has been quite choppy. Now coming to the margins, that has been better than expectations. Margins improved by 40 basis points, and this is despite the wage hike impact. So clearly the INR depreciation played a positive part. Some of the other concerns, one we highlighted was the revenue decline. Secondly, digital revenues, because the company has been positioning itself as a digital company, but digital revenues have declined for the second straight quarter, in this quarter down 1.7%. Thirdly, the company has an exposure to the IL&FS group to the tune of 43 crore. These deposits are due for maturity from January to June of 2019. As of now, there have been no defaults, at least till the 30th of September, but the company is monitoring the situation and they've not made any provisions for impairment, but that of course is a risk that the street would be worried about. And finally, there is a risk to the FY19 guidance as well, because the company in their earlier interactions had indicated that FY19 revenue growth will be more than FY18, which was 9.7%. Now, in the first half of the year, the company has delivered a growth rate of 4.7%, which means the asking rate in the second half of the year is very steep at more than about 14%. It's possible always, but of course, looking at it right now with the performance, it seems to be quite steep. In fact, if you hear the management, they also sounded a tad bit cautious. Listen in.
This quarter's numbers in terms of total were 835 crores, and the profit has gone up by a bit. In terms of the rest of the half, a lot of our numbers depend on the second half of the year numbers coming in from various sources. So it's very hard to predict if we will really make the same number growth that we had anticipated. But there is a chance. I do realize that the run rate that is required for the second half to make those numbers is significantly higher than we had anticipated, and this has been a tough quarter. But it is going to be hard, but it is possible to make those numbers. So I don't want to really do anything specific to say that it is not possible at this time. Yes, so we had a few projects where we had challenges, and one of the projects where we were working on got short closed because sort of unanticipated. This happened towards the second half of September. That meant that certain people who were allocated, who should have been billed, and some project work that we had done during the quarter could not be accounted for. That caused a revenue loss and also affected some of the on-site utilization and some of the other parameters as well. And also that will have an impact for some of the revenues for next quarter as well. And in general, while the market has been pretty good, I think some of the challenges we have had on getting the right people on the right projects has also affected this quarter's numbers. There have been some impact of the H1 issues as well on some of these projects, because some of the key people who were on these projects had to come back because of the visa changes that had to be done during the quarter.
All right, so another mid-cap IT company getting beaten out of shape the day after their numbers. On Friday, we had Mindtree, which lost about 16%. With that, we shift focus to a CNBC TV18 exclusive. Sources tell us that SR Steel's lenders are set to vote on ArcelorMittal Nippon Steel resolution today. Ritu joins in with more details. Ritu?
We reported on Friday that ArcelorMittal, along with Nippon Steel, the joint venture that had bid for SR Steel, was selected as H1 or the highest bidder by the lenders. The bid that was approved at the time was 35,000 crore rupees upfront payment, plus another 8,000 crore rupees as capital infusion. We understand that negotiations have taken place over the course of the weekend, and Arcelor has agreed to raise its offer to about 42,000 crore rupees as upfront payment, which implies almost 100% repayment to some of the secured financial creditors. Even if you look at in overall terms, it will be 85% of that 49,000 crores that will be repaid. We do understand that there will be a voting on this offer that will take place starting at 6 p.m. today, and it will be kept open for 24 hours, so the results should be known tomorrow.
Okay, and we'll come back to you for more on that. Thanks so much for joining us, Ritu. For now, NBCC is a stock on our radar. It's gotten a letter of awards for projects worth almost 1,400 crores. So that's why the stock is up. We'll try and get you more details on that. But for now, that's the only initial, tick that we're getting on the news flow. Up about 2% on NBCC. But the markets are still where they were when we started the show. So no movement at all. Bank Nifty is doing well, but apart from that, it's a very lackluster day. Let's get in some market opinion then. We spoke with Manish Gunwani of Reliance Mutual Fund earlier today. He says India seems to be getting stable again as far as the macros are concerned. Listen in.
Clearly, we've seen this calendar year the mid-caps correct quite a bit. But we also have to see it in context that 2014 to 17 was a kind of golden period for them. So at this point, our broad view is that we're kind of neutralish between large cap and mid cap. I think mid caps on an aggregate still a bit expensive, but if you think about it, there's been a big polarization within them as well. What we're seeing is that inflows have held steady last couple of months when markets have been really volatile. So at this point, it does look like at least the SIP segment that seems quite strong. India seems to be on the verge of becoming stable in terms of macros again, because we've seen a fairly sharp currency depreciation in a year where crude has gone up and currency has depreciated. We're still able to get a CPI number of 4% is something which is very creditable, because this is in a country where last 20-30 years average consumer inflation is 7-8%. So I think we should not ignore the positives on the domestic side. What I feel could be a headwind for next 3-4 quarters is the fact that the US still seems to be the best performing market in the developed markets, and emerging markets growth has also cooled off.
All right, important market commentary coming in there. Meanwhile, we're also getting in some macro commentary. The CBTT chairman telling CNBC TV18 that the direct tax to GDP is at a 10-year high. Good news for tax compliance.
Well, anger over the increasing fuel prices rage as 400 petrol pumps will remain shut today in Delhi to protest against the Delhi government's refusal to reduce the value-added tax, or the VAT, on diesel and petrol. Nitisha Kashyap joins in to tell us more on that.
This is a petrol pump near Mandavli metro station, and you can clearly see the deserted look that this petrol pump is wearing right now. In fact, there's not a single vehicle in this petrol pump. They are not selling any petrol or diesel for that matter today. They have also participated in the strike, which have been called by some 400 petrol pump dealers in the capital. In fact, the strike is against the VAT. They have asked the Delhi government to reduce the VAT. According to the petrol pump owners, they are saying that because of the increased VAT value in Delhi, they are facing a lot of difficulties and losses. In fact, they are saying that in Delhi alone, they have faced some 40% of loss in petrol sale. In fact, the petrol pump, which is near the bordering areas of UP and Haryana, they have faced more than 40% of loss in last 1 month. And they have requested the Delhi government to reduce the VAT, and therefore they are observing a strike today. And this petrol pump in Mandavli area is also participating in the strike.
Okay, all right. Well, on that very happy note, it is curtains down on Business Lunch, but don't go anywhere. Lots of action coming up on Midcap Radar. Hi guys, good afternoon.